Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 9th of July, Bull versus Bear webinar. Steve Miley here on the Call for Trading. Welcome to the Trade Day team. Welcome, everyone. Going to go through our usual regular run through in here today. It's going to be fairly brief. There's not really too much to say in here at the moment. Going to run through all the macroeconomic, geopolitical, fundamental events that are shaping financial markets right now. We'll kick off with the calendar. You see a light data calendar on the European side and on the US side. US side very quiet all week, but we have really what is the main kind of focus on the week from a macroeconomics perspective, which are the FOMC, the Fed meeting minutes from their last meeting in June at 2 o'clock Eastern time, 1400 hours Eastern time. So watching out for that. I mean, the Fed have been very vocal. Fed speakers have been out there. Powell's been out there talking more recently. I don't think we're going to get a lot in here that we don't know already, but nevertheless, we do our due diligence and keep an eye on that. So nothing really too significant apart from the Fed, and I don't really think we're going to get too much from that. I'm just going to see if I looked at this earlier, and the Morning Briefing America hadn't rolled in yet. So let me see if it is here. Let me just refresh the page. There's the Asian version, the European version. So let me bring up the European version because it doesn't look like the US version's out yet. But yeah, effectively, copper in here, copper market in terms of Trump touts 50% tariffs. It spiked higher and then has moved back lower in here today. I think markets are taking what Trump is, talking about tariffs a little bit with a pinch of salt in here at the moment. Markets have been very docile this week, given that today was actually meant to be the tariff deadline for the 90-day pause from the Liberation Day tariffs. That's kind of been rolled back now to the 1st of August, and like threats that letters are going to be going out to European Union and potentially other major partners in here, trading partners, but nothing is yet. Remember, the major trading partners, Japan, Korea, and the EU are the main ones. But the headline they're grabbing at the moment is 50% tariff on copper imports, and also said drug companies may a levy as high as 200%, but that's going to be potentially further down the line. But markets are not really reacting because they kind of realize that they've been threatening these tariffs, then taking them off and pausing. It's just a negotiation tool, and so markets are not reacting too much to that. So, there's not too much more going on in here at the moment. Stocks and oil gain as traders shrug off Trump's tariffs news. Exactly what I've just said there. European markets are up this morning but the copper price did spike higher, but then it's rolling back in here at the moment. Investor dilemma in here, talking the same in here about whether they take on board what Trump is saying or not. In here, copper market in turmoil as Trump touts 50% tariffs on US imports. To talk about stocks waver on tariff threats as LME copper falls back lower today. I mean, initially spiked higher. Trump says he'll set 50% copper tariff. Wait a year on the drug levies. Investors set for you. So this is coming up, right? So this is out. I spoke about this at the beginning of the week. It's not till next week we get. I think it's Tuesday. It's Tuesday. We get earnings season kick in. So investors may be in a bit of wait and see mode. As I say, the data calendar is really, really light a week. Fed today, really nothing at all from the US all week in here. And even the European calendar is relatively light. So I'm looking for markets to maybe consolidate throughout this week now, maybe get a little bit of an impetus out of the Fed this afternoon. But I really don't think we're going to get too much. And unless we get something on the tariff front, I think it could be a real whole week of consolidation, obviously going into the early summer. But US earnings kicking off in earnest next week on Tuesday with the financials and banks reporting. And if we look on the overseas, the roundup in Asia, the Nikkei's up about 1/3% with the Hang Seng down 1%, but European bourses are doing pretty well in here today with the UK FTSE up 1/3. German DAX up pretty much 1%, and same with just over 1% for the French CAC. US futures nudging back higher in here, about 1/10 up for both the S&P and NASDAQ on the overnights. Just turning our attention to the interest rate markets, pretty much no change expected. The the late July meeting in here from the Fed, 95% in here that we will not get a rate cut or any rate movement in July. But then we are expecting only a 34% chance that we do not cut rates by September. And then by October, there's we're at a 45 plus 50, what was that, 58, 59% chance we've actually got at least one cut in here, and maybe up to what we got in here, about 40. So yeah, about 40% chance. 60% chance for one cut and 40% chance for maybe two cuts or more, but for two cuts by October. And December still looking for only really the two cuts. But an outside chance, about 30, just over 30% chance that we have three cuts by the end of the year. So the market's pretty much pricing in two cuts, likely September, October, going into the end of the year. And that's what the Fed is telling us. The Fed have said in their dot plot chart and their economics projections that the dot plot chart is pointing to two cuts by year end. On the interest rate markets, 10-year yields have been moving steadily back higher into this broader range. The market's been really in this broader range, caught between 4.10 and 4.65% in here since for most of this year. We did get this spike down when there were some concerns about the deficit in here. The market did spike down and then spiked significantly back higher, but pretty much caught in this range. We're kind of right in the middle of that range at the moment. So the interest rate market not doing too much. In here, we do have a bearish view on the 30-year bond, and across the board in here now we moved more bearish with the sell-off to lower prices, higher yields, and so we've got within that range we've got a more bearish outlook across the board in here from 30s, 10s, 5s, and 2s. So bearish on price, looking for potentially higher yields on the equity markets in here, both the S&P and Nasdaq. Despite this kind of chop sideways, the underlying bullish theme that we have in here remains very much intact for this whole recovery effort and this breakout that we saw back in June, and there have been consolidation for much of July. Markets have made new highs more recently, so looking for further upside, even though we're in this kind of chop sideways. So maybe it's like a slight rebound back higher, but as I said, more of a consolidation feel with a slight upside bias from my perspective in here, as markets have we're at a very small slip for the last 2 days, and since the NFP bullish breakout that we saw back last Thursday after the non-farm payroll employment data, market's kind of given that back, but just kind of drifted low and maybe looking for a rebound back up somewhere towards the highs, but not looking for a strong bullish theme to come through with a lack of real data, unless we get something particularly interesting out of the Fed meeting minutes, which I very much doubt later today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Yes, it was a brief webinar, but there's really not too much to say, so I don't try to say too much if there's not too much to say. But I'm going to wish you all a great trading day. Duncan will be back with you tomorrow, and I'll round off the week on Friday. Take care. Stay safe.